What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. I wanted to make sure I get this video out for you because this, to me, okay, feels like the first full week of the new year. All right. Now, before we get into the actual topic of tonight's video, right, which is meant to gear you up for this week, all right, get you in the right mindset, all right. I went over something with the Discord group, and I want to go over it here with you guys in case you're not in the group. All right. So we've got a new trading year. This means you're basically starting a whole new batch of fresh statistics. Okay. Your stats, you can reset them now, right? We've got a new year ahead of us. 252 trading days. Okay. Roughly 50 trading weeks. Okay. That's a lot of days. Now, if you have 3 to 6 instruments that you're following and you're tracking on a regular basis, and each one of those instruments could give you a potential of 1 to 3 obvious trade setups every single week. All right, let's do the math here. On the low end, we're looking at around 150 trades this year. All right, and that alone should tell you on the low end, right, that there's no reason at all for you to force anything in these markets, okay? On the high end, we're looking at around 900 trades, okay? Legit trading setups, all right, that fit in with our strategy. Okay, that should blow your mind, okay? This is the type of mindset, this is the type of thought process that destroys FOMO, okay? Just obliterates it, gets it out of your trading, okay? If we find a happy medium, we're looking at around 300 to 400 well-engineered best trade setups this year, okay? That's enough time and enough data to allow for your edge to play out, to let your drawdowns, kind of normalize, right? Because everyone's going to go through periods of drawdowns, right? But this is enough time for that to normalize, all right? And you're going to be soaking up experience along the way that allows you to trade based on your experience and not your hope. One thing that I told the traders in the Discord, right, is that you're not hunting unicorns out here. You are running a numbers business, okay? So let that sink in. Let that sink in for you, all right? Now, the topic of tonight's video is the master pattern template. We're going to go over some chart examples that are straight out of Stacy's playbook, all right? We're also going to look at Friday's charts, and I'm going to show you sort of my thought process when I go and I look at my charts, okay? And I'm trying to figure out what am I going to be looking for the next day, okay? We're going to look at some of that, okay? So here, we've used this slide before. You should be familiar with it, but this is the master pattern template, okay? This is the building the house. This is what Sniper Trades calls, right, the Castlevania castle, right? The market sort of looks like a Disney castle. We're building these towers as we go up, and then the profile, right, goes back down on this side. The towers get lower, okay? So this is the master pattern. Now remember, this could be 3 days, it could be 3 weeks, it could be 3 hours in the session, etc. We're looking for a peak formation low, a peak formation high, and then lower lows or higher highs. In this case, lower lows, right? Or a pump, coil, and dump type of trade, okay? But this is the master pattern. This is the most important pattern, right? Traders all the time are saying, ooh, I'm going to focus on this setup or that setup, or I'm going to be looking for this pattern, okay? This is the setup. There's only 2 types of trades, okay? And this is a well-engineered chart. This is what it looks like. So we're looking for a peak formation, whether that's a peak formation low, then high, or a peak formation high, then low, and then lower lows or higher highs. Now, I was trading profitably before I had this master pattern, okay? But This master pattern put my trading on a whole nother level. This is what has allowed me to branch out of the New York session and also look at setups in Tokyo and in London. Because if you understand this properly, right, then you can basically open up your charts in whatever session and know exactly where you're at because you have this frame of reference of the master pattern template, right? That's how you're looking at the market. So this first peak formation, second peak formation, this could be Tokyo, London, okay? Or it could be London, New York, then Tokyo, right? While this market's going up, this is our front side of the move. And while we're on the front side of the move, we are looking for dump and pump type of trading opportunities, right? But when this market shifts from front side to back side, on the back side, we are looking for pump and dump type of trades, all right? So this could be 3 sessions, or this could be Monday, Tuesday, Wednesday, right? Your peak formation low is day 1, peak formation high on day 2, all right? And then we're looking for lower lows or higher highs. It's that simple, all right? It's that simple. This is the pattern, okay? There's nothing else that is going to allow you to see the market like this, okay? This is the only thing. So here's some examples straight out of the playbook, all right? And we're going to go over something a little extra with this specific example, right? You can see here that we do have our master pattern. We have our peak formation low, peak formation high, and then we're making lower lows on the way down, okay? Front side, back side, all right? You could use this peak formation low, peak formation high, okay? And then maybe these are your lower lows, okay? So peak formation, lower lows, pump and dump to take out this level, take out that level, all right? Remember, every time, if you're looking for a pump and dump, you need an anchor point, right? There will be an anchor point. Here's that anchor point. We put in this peak formation low. This is a peak formation low of the day. And then the market starts pumping up from that level. So this is our potential target, our potential anchor for that pump, coil, and dump, right? So here, Stacy has highlighted the previous day's low and the previous day's high. Stacy's also marked off this low on the inside right here, okay? And you can see that this is our rectangle, these external highs and lows, that's our rectangle. But also we have this smaller geometrical rectangle, as Stacy likes to call them, right? A geometrical rectangle. I'm always like, what other kind of rectangle is there, bro? Like, you know what I'm saying? But this is our consolidation, right? Now, when the market consolidates, we have that high and low range, right? The market is in a trading range. We have this high, we have this low. The market is stuck inside of that box, right? Now, at some point, the market's going to break out of that box. And it's our job to figure out which side the market's going to break out of, right? That's what you would think, right? We are going to predict, okay, we're going to break out to the high or we're going to break out to the low. But that is not actually what we want to do. A lot of traders get caught up on this idea of predicting the market. They think that they're special if they can predict the market, okay? But that is not going to get you consistent wins in your trading. So instead, we want to wait for the market to show us its hand, all right? And at first, this may feel awkward for you, right? But just check it out. So here's that high and low. We know that 80% of breakouts fail. So we can see that going into the New York timing window, this market, or sorry, I think this is the London timing window, this market breaks out of the previous day's high, okay? It breaks out of this consolidation and then immediately trades back into the range and then trades back into the highs again. And then we lock in that M pattern. We get this big engulfment here on this 15-minute chart. Okay, these pin hammers at the highs. Okay, then the market starts to break down. Okay, so we had our false break of this consolidation at the highs. Now the market is coming down. So if that is our false break, we would expect for the lows to get broke, right? But we don't just enter up here. Okay, we actually want to wait until we see that breakout happen before we enter. All right, and you can see this market goes lower, pumps back up right here. Stacy has it labeled low hanging fruit. He's showing you where he would get in after we trade back into that EMA. But you could even wait, right, until we break this level and get in right there. You get in as soon as we break that level. We've already had the false break of the high, and then this market melts and goes through that initial anchor point of the pump and dump trade. And this is how I'm using the market when I go to my charts, right? If I see this peak formation low right here, I know that this is a potential anchor point for the trade. So I'm going to be eyeing this level as a target, and I want to see this market pump up, coil sideways, and then dump. Here's our next example. Okay, yeah, okay. Here's our next example. Now, this is like a fractal example, right? The whole day is not the master pattern per se, okay? It's still doing its thing. But if we start from right here, you can see the master pattern, right? We have our peak formation low, our peak formation high, which is basically this entire consolidation. When we break out of that level, that's our lower low on the inside. The market pumps back up and then dumps, taking out this original level right here, and then going even further back into these levels here. All right. But here again is our consolidation. Okay. Our coil. We don't trade on the inside of this. We wait for the market to show us what it's doing. And so when it breaks that level, that's when we can get in. You see, we've hit the previous day's high of the day level. The market then coils sideways. This is a bunch of traders up here buying into that high. Okay, breakout traders on the daily chart, they're buying this market. All right. And then bam, all of these traders get trapped with this big engulfment. Okay. This market should not go back up there. All right. Smart money doesn't work that way. There is no mercy in these markets. They're not going to go back up here and potentially let these traders out with a small loss or a break even, or maybe even a small profit, depending on where they got in. No, no, no. Smart money doesn't ask for your money. They come and take it out of your account. And that's what's happening right here. This is trapped volume at the high of the day, high of the week, whatever, right? For the dump. And here, okay. And also, okay, yeah, we did talk about the master pattern. Here is our last chart example. I hope you can see the master pattern playing out here. We got our peak formation low in Tokyo, peak formation high in London. This market coils sideways, okay? And then bam, we break through that death line. That's our lower low on the inside, okay? Front side, now potentially on the back side. This is a 15-minute chart. Those two candles, that's 30 minutes of a coil right here before this market continues to dump and take out that current low of the current day, right? You see what I'm saying? And here's the previous day's high. So this market comes in, puts in this low in Tokyo, then marches higher, breaking that previous day's level, coiling. Okay, we have our rectangle up here at the highs. Then we break out, coil, dump some more, right? That is the master pattern. This is a well-engineered chart. The master pattern is always going to be there. So if you came to your charts in London, all right, and you know about the master pattern, you can see this potential anchor point here, and now we're pumping up. Maybe you should wait because we only have our peak formation low right now. And then if we do lock this in the London session, here's our peak formation high. So there's our peak formation low, peak formation high. We're waiting to see those lower lows before we enter this market. All right. Now, when it comes to, all right, here's another example. I forgot about this one. You're going to see this happen all the time, okay? Something like this. Not this exactly, but something like this. You can see when this day opens, first off, the market's been moving down, right? But when this day opens, we get this sort of peak formation high in Tokyo right here, right? We get these little highs. Then this market dumps. So these levels right here are going to be my anchor point for the dump, coil, and pump, right? That's the target that we're going to be aiming for on the other side of this trade. When we get done with this, front side backside. Now, again, we have our peak formation high, peak formation low, or over here, this peak formation low, you draw your little trend line, okay? And you can see that way over here, we break these levels, okay? We just barely break through that blue line, this consolidation, okay? The market breaks through there, pulls back, right? And then continues to go. Now, one thing that I've noticed, right? Because like we said, 80% of breakouts fail. So when this little blue line is broken for the first time right here, right? How do you know that that's not a false break? Okay. One thing that helps me out, okay? Notice something. Let's go back to this slide. You can see here's our consolidation, right? When we go up here, we actually break through, a pretty good distance above that and put in this M formation, okay, to go lower, right? But if this market were to, like this chart, just barely break out and then pull back into the range, that may be the continuation, right? It's not going up and then putting in an M formation, right, for the fall or a reversal signal to go lower. It just barely poked out of there, and that sort of is like the clue. That's your first like higher high on the inside. Then this market dumps and then pumps to take out that high on its way to putting in the next new high, right? But you can see this is the same deal: dump, coil, pump. All right, we have our anchor point right here. Now, I'm going to show you how I'm applying this to the charts. So this is our current DJ chart. You can see that Friday put in this sharp low right here and then started to pump up. So this is my potential anchor point for this chart. I want to see this thing pump up, right? Maybe we coil through Tokyo and London and then pop the top going into the session for the trade lower, right? Taking out these levels at some point, right? The pump, coil, dump. Or I would want to see something like this, where we have this low, but instead of this low becoming our target, this market is going to continue to go higher. So I know if I'm looking to take it lower, I want to see something like this. But if I'm going to take it long, I need to see the market do something like this. We need to pull back into those previous days levels, okay? And the master pattern is at play here. I want to see the master pattern. Peak formation low, peak formation high, okay? Peak formation high right here, and then lower lows when we break through this level right here. And we're in there, okay? Or in this case, my bad. In this case, our peak formation high in Tokyo to go lower, peak formation low in London, higher highs going into New York for the dump and pump continuation trade, trading back into the previous day's levels, right? If this market's going to give a higher close, if we can get in, if we can buy anywhere at or below the previous day's close, we are getting a good price, okay? We're buying below the previous day's close, thinking that we are going to get a higher close, right? So we are buying low. Okay, we're getting in at a discounted price once it trades back into these levels, and this is how the market moves, right? We break out, pull back, continue. Okay, so this would be our pullback into these levels from New York, all right, for the trade higher, and the master pattern is always in effect on a good chart. Okay, or we could see something maybe like this, where we have that coil, and then this market breaks the downside of the coil and then spikes back up into the highs at 9:30. All right, so we hit both sides, we break down low, and that first breakout there to the downside might be the clue that this market is indeed trying to go lower. But then we pull back one more time, we trade into and through these highs, right? Picking up those orders, taking all that liquidity from up there. It's like a liquidity sweep, right? And then lower lows again for the pump and dump trade on the way back down, hopefully targeting these areas, all right? Or again, something like this, where we coil sideways and then into the open, start dump down, going into that open, right? And then trading higher for a continuation in the long direction, right? Here's the NAS, same sort of thing. Yesterday, we put in this low, right? So we have a peak formation low. That's our most recent peak formation, is this peak formation low. So I want to see this peak formation low. We're on the front side, peak formation high, okay? Here's our first lower low up here because we broke this low, okay? Then we got more lower lows for the pump and dump type of trade going into the session to take out this anchor point, all right? So that's how I'm using the master pattern and stuff, all right? I'm telling you, this is really, I mean, it's as simple as it gets, right? The market's either going to do two things. It's going to go up or it's going to go down, okay? And so this is our way of figuring that out. And like I said, if you understand the master pattern correctly, every time you come to your chart, you're going to be able to see, okay, I'm on the front side of this move. If I'm on the front side, I'm looking for dump and pumps as we go higher. If we're on the back side of this move now I'm looking for pump and dump type of opportunities on the way down. So if you're looking at 3 days, right, and you have your peak formation low on day one, peak formation high on day two, and we've started to make lower lows, you know that if you come to your session in Tokyo, you're looking for the market to pump up in Tokyo, coil sideways, and then dump to continue those moves on the backside, making lower lows. All right. So I hope that that makes sense for you. This is how I'm marking up my charts for tomorrow, right? I need to see something clear like this. I want to see the master pattern executed clearly on these charts. And if I don't see that, then I know this is not the market for me to trade. I'm going to push the skip button. Okay. I might sit out the whole day. If this market, just starts meandering around, is going down, is going up, is going down, is going up, I'm just going to skip it. I want to see clear price action, something that I can recognize, all right, based on all my other trades. Now, I appreciate all the support, all the new faces in the Discord. I can tell you guys like really want this. You're working hard at it. Everyone is learning, at their own pace. But I can tell you, bro, I see you guys making strides. Okay. So I know trading's difficult, but you are making and taking steps in the right direction. So don't count yourself out. Okay. Give yourself a pat on the back because you've been working hard and you deserve this. All right. I appreciate all the love and support that the YouTube channel has been getting. I think in this last 30-day period, we've got like 70 new subscribers to the channel, which is absolutely mind-blowing, right? But I appreciate that. And until next time, I hope you continue to free your mind.